Dear all, now today we are going to cover about session 2 of our accounting to SAP FICO complete learning path, the next gen accounting and SAP FICO guide. Now what we are going to learn today, first fundamentals of SAP, SAP overview and SAP FI. We will be covering about general ledger, accounts payable, accounts receivable, assets accounting, bank, and then we are going to cover about a recap of our earlier sessions, what we have learned, what is a journal, what is a ledger, and then what is a trial balance, what is a balance sheet, how we are going to make how it has been accounted like that. So So that is why. So accounting flow, the pictorial view. First, we'll be making a journal entry, identifying the business transaction, and then classify that business transaction into the ledger, and then identify and verify whether it is a debit and credit matches with a trial balance, and then verify that business performance through the profit and loss account, and then we'll be making an adjustment entries reconcile between your profit and loss account and balance sheet if it's intercompany profits or intracompany adjustments, and then accrual entries, outstanding entries, deferral entries. We will be making adjustments and then reconcile between that. So these are all the activities is going to happen in the SAP CO and SAP FI also. The transactions are recorded first, classified, summarized, analyzed, and finally reported as a financial statement. Now, we are going to talk about SAP. What is SAP? SAP is an enterprise resource planning, and SAP is a leading ERP software that integrates all core business processes into one centralized system. Integrate the business processes, it connects departments like finance, sales, HR, production, and supply chain for, for seamless data flow and real-time data and a decision support. SAP provides a real-time insight, analytics, and reporting to improve the business efficiency and strategic decision making. The SAP is having about a plan. The plan is called SAP production planning and then SAP plant maintenance. Source materials management, that is a source, and then recording SAP FICO, and then sales and distribution, selling of the goods, selling of the goods, and then HR, people's management, and then make with the help of that SAP materials management, SAP quality management. So this all are linked with the, each and every models are linked with the SAP. So every departments, every cost centers, the profit centers. We are going to talk about in a SAP CO model. We are going to talk about the cost center, profit center, and then what is the how it has been accounted like that. So this is where how the GL account has been classified between your reconciliation account like that. So now we are going to talk about the key benefits of SAP. Improve the efficiency. It will help you better decision making, the cost saving, scalability, and flexibility. Now we are talking about SAP FICO. The SAP FICO, the financial accounting and controlling, the integrating external and internal financial management. SAP financial accounting is a SAP FI is having a general ledger, accounts payable, accounts receivable, asset accounting, and then bank accounting. The output is the balance sheet, profit and loss account, the cash flow. And then SAP FI will be having about how there's been external reporting. For example, when you are receiving a goods GRIR goods receipt, GRIR clearing account when you are making an inventory account, and then revenue and tax, and then when you are making a good receipts, revenue and a tax, when your goods is coming out, and then now we are accounting. For example, when you are posting an when the goods is received, when the goods received is inventory account at R to GRIR account. So if we are debiting an inventory and then GRIR clearing account, what does that mean? Debit receiver, credit the giver, debit what comes in, credit what goes out. That concept of the real account concept need to be incorporated. So debit the receiver, credit the giver, and then what we will be doing that, and then WIP, the variance calculation, the variance settlement. So we will be having a Miro. Miro means we are going to book your vendor invoices. We are going to book on vendor invoices that will comes on the Miro. What is a three-way of invoice verification will happen. One is what a time of a good when an inventory received, what is the accounting inventory account data to GRIR account. And then when you are making a Miro entry, GRIR account data to vendor account. And then subsequently, when you are making a payment to the vendor account will be debited and then bank account will be credited. So it will be the interlink of that, how it has been external reporting, the sales, those sales will also be happening. We will be creating a sales order, we will be making a billing document, we will be making a PJI. PJI means when we are issuing the goods to the customer, that is called as a PJI, post good issue. We will be making that. So when you are talking about that, in SAP FI, as I mentioned very clearly, that is, we are classifying between that general ledger, accounts payable, accounts receivable, asset accounting, and bank accounting. In between the profitability, as I mentioned very clearly, that the CO is your it is internal management reporting for the improvisation of the profitability of the product which has been produced by the company. So in the CO, we are going to talk about a cost center accounting, internal orders, product costing, profitability analysis, a profit center accounting. So this will be called as an end-to-end finance cycle, the procure to pay, order to cash, record to report, and then period and close. So what is record to report? From the record to the report. So from the journal, ledger, trial balance, profit and loss account, balance sheet, report. So that is the way we are record to report. We are classifying that. Procure to pay, identifying a supplier, creating a supplier invoice, and then purchasing to the purchase order, or through by way of cash, or through the bank, or through the credit. So we are making a purchase. So it will happen procure to pay. Order to cash. We are making order to cash. The sales of we are making a sales to the customer to way of making a sales order. Billing document PJI received of money from the customer. When I'm receiving a money from the customer, see we are accounting as a receipt from the customer. When you are making a sales, we are accounting income. When you are making a purchase, when you are making a payment to the supplier, we are making to the payment to the supplier. Okay. Record to report. The cost month end closure, as I mentioned very clearly, it is a verify, accuracy, and then close. Now we are talking about a chart of accounts. So what is a chart of accounts in a GL accounts? The GL accounts is the fundamentals of the financial reporting. What is the categories you will be having about? Assets, liabilities, equity, revenue, and expenses. So if you see that in a categories, a chart of accounts has been classified into this category. So this will help us to differentiate between your journal, identifying a business transaction, and then sourcing of the document, and then classified according to the ledger. That is why the accounting categories is useful. What are the types of chart of accounts? The chart of accounts is an operating chart of accounts, group chart of accounts, and the country chart of accounts. Operating chart of accounts, what does it mean? Operating chart of accounts is where day-to-day operations activities is happening in the chart of account. Group chart of accounts, the holding company and the subsidiary company, the holding company at the US Indian company. So the holding the group, we are following the group companies follow it. So what are all the transactions is happening when you are reporting currencies, your group currency? So what are all the transactions is happen in your local currency? Means holding subsidiary currency. So it will be booked to be reported in the holding company. So country chart of accounts. A country chart of accounts will be the specific to the local gap for any, for example, US gap, Australian gap. So accordingly it will happen. So when you're talking about the GL accounts, sector will be starting with the, we'll be calling as a number range. Assets, it will start with 1. Liabilities, it will start with 2. And then equity, it will start with a 1 or 2. Based on that, assets or liabilities, and their revenue will be 4. Expenses will be 5. And then it will be any other expenses will be classified as a 6. So we'll be classifying as a number range. So the most important thing, as I mentioned very clearly, that sequential order, chronological order to book your expenses. So that is called in SAP as a number range. Okay, and then as I mentioned, how CA works: business transaction, GL posting, trial balance, financial statements. What we have learned in the previous sessions: business transactions, classifying, verifying, and then close. So this is where the fundamental start of accounting will help in the every aspect of SAP. Now, the identifying business transaction, GL posting, trial balance, financial statements. The importance of chart of accounts is accuracy of the reporting, standardization, the compliances, and internal analysis. What does mean compliances? So when you are making a payment, when you are accruing for tax dues, we are accounting the tax dues. We need to see that whether a tax dues, how much a tax due, how much we need to pay to that GST, VAT, according to the country localization, right? So this is the most important thing. The chart of accounts plays a vital role. The SAP FI sub-modules, as I mentioned very clearly: accounts payable, accounts receivable, asset accounting, banking. I have mentioned very vendor invoices, payment process, AP reconciliation. Accounts receivable is a customer invoices collection, AR reconciliation. Asset accounting, asset master data, the depreciation, asset reporting. The banking, the bank reconciliation, the cash management, and the electronic payments. Now we are going to talk about some topics of overviews of the accounts payable, accounts receivable, and then asset accounting. We are going to, today's session we are having to give some overview of the topics in the. So accounts payable process, as I mentioned very clearly, we want to make a purchase order. So purchase order, you're making a purchase order, there is no accounting entry. When you are making a good receipt, so what is meant: debit what comes in, credit what goes out. That is a fundamental, right? So means inventory is coming, JRIR is going, supplier or bank or something. So inventory is coming, that is means inventory account debit, and then JRIR clearing account. So invoice, when you are making an invoice, what will happen? Because GRIR account data to vendor account. See, the previous accounting entry, we have debited the inventory account, credited the GRIR account. When you are posting for invoices, GRIR account will be debited. Now the vendor will be credited. Means if you're knocking off the GRIR account to GRIR account, will be knocked off. Inventory account data to supplier account will be there, and then payment to the suppliers. So in SAP has provided the functionality whether we can make a payment manually or automated also. We want to define in a coming sessions. We are going to talk about how we are going to do the payments, what is the process we are going to adapt it for the payment, how the invoice has been created, how the good receipt has been happening, how the purchase order has been created, like that. So when you're talking about reports, see, okay, when your accounts payable, we are make accounting of the supplier invoices. We made an invoice of $10,000, and afterwards, so when a custom supplier, we want to make a supplier of $8,000. So we are making a payment to the supplier $8,000. $2,000 is a due. When you're seeing about AP reconciliations, we'll be seeing that how much money is due to the supplier. That means we can identify, it is improve your working capital management, how to improve the cash flow, how to improve that, ensure accuracy, maintain the ex vendor relationship, and then the trade payables. The trade payables means tracking of your payables. Similarly, now we are going to talk about the accounts receivable process. The accounts receivable process, the credit limit. So when you're talking about a credit limit, for example, for every customer is having about credit limit 100,000 for each supplier, each customer. With the customer is having that, the customer is making a sale, we are selling to the customer. The payment terms is 30 days. Customer is not making a payment in time. So, but his credit limit is being exceeded 100,000. Now, SAP system will see that there is a three-way of invoice verification. The system will check that whether you want to make a payment or not, whether money is going to come or not. In that case, SAP will start to not to make a sales order. First step. Okay, and then second, but we have made a good receipt, we have made a invoices, everything. But system will say the SAP credit limit is exceeded. In that case, system will not allow to make a PJI. Good issue will not happen. And then finally, the credit limit is exceeded. We can't issue the invoices. So the credit limit is a benchmark of the customer, whether he is paying the money in time to tracking of that. So the sales and distribution team will be creating a sales order and then delivering the goods and then invoice the customer, and then the invoice will be posted to the finance. The finance will making the payment receipt, and then accounting of the receivables, and then reconciliation of the receivables, and then aging of the receivables, and then it will improves working capital, the faster cash flows, improve the collections, reduce the bad debts, and then enhance a customer relationship. The most important thing in accounts receivable, it is also included the intercompany suppliers, intercompany customers, foreign export customers, export customers, domestic customers, types of sales organizations, departments, type of the revenue, milestone billing, event-based achievements, right? So whether the customer is going to bill it on the milestone billing, each and every process will be happening in accounts receivable, and then it will be based on that invoice will be accounted, invoice will be issued, good issue will be taken place. And finally, the fixed assets. We are seeing the fixed assets, we are seeing types of asset classes. SAP will have a types of asset classes, means type of assets. It is a land and building, it is a plant and machinery, and then vehicles and equipments. We'll be making an acquisition of an assets, and then sale of an assets, and then transfer of an assets, and then every month end we'll be computing a depreciation as per the local law and as per the reporting currency law. Means, for example, that is called as in SAP we'll be calling as a ledger leading ledger and non-leading ledger, how it is going to happen in the leading ledger, how we are going to account in the non-leading ledger. So the leading ledger means it has been associated with your group, associated with the operation chart of accounts, group chart of accounts. Non-leading ledger is helpful for accounting for MIS purposes. So the non-leading ledger is one of the most important thing. It is for MIS purposes. We can account it accordingly. Thank you. Thank you for your time. Now we'll be seeing on the third. The day 3 sessions will be coming, weeks will become. Thank you for your support. Please, if you are interested, please subscribe this channel. Thank you.